Hello, everybody. I'm Ethan Feller, stock strategist here at Zacks. And today I'm going to do a video that's a little bit different than my normal format, but I'm going to go through basically the process that I use to pick and analyze stocks using the tools at Zacks. I've been a trader for about 10 years, and I've been with Zacks for about 3. And I never used it until then, but I've found it to really be one of the most useful tools on the internet for reading about finding stocks, analyzing and doing research. And specifically, I really like the stock screener. I've used all of the stock screeners, all kind of tools on the internet for looking at stocks. And the screener at Zacks has extremely broad stock coverage, international, small caps, and it's very easy to use. And it's especially useful is that it also integrates the Zacks Rank, which I can't understate how useful it is in finding good stocks. So I'm going to do a little tour of the Zacks site and the screeners, and I'm going to go through my whole process of how I pick stocks, how I analyze stocks. And anyone who looks at my content regularly and follows the stocks I pick, you'll know that not everything is a winner, but I do often pick stocks that go up a lot. So hopefully you find this valuable, and I'll get into my whole process, and I'm excited to share it and get into it. So let's get into it. Here you can see this is the Zacks homepage. If you haven't used it, you should definitely get familiar with it. Come and check the daily stories. Even if you're not a premium member, you can get lots of free analysis and articles and updates on a daily basis. You got the bullet of the day, the bear of the day, all kind of good stuff here on a daily basis. You can have a portfolio that you follow. And yeah, so highly recommend coming here. When you become a premium user of Zacks, you get access to the Zacks Rank, which is really the meat and potatoes of what Zacks has to offer. It's where it's an extremely effective tool. I've studied all kinds of quantitative and systematic investment processes and studied, how you find alpha, how you find edge, how you find winning stocks. And the Zacks Rank is really good. It's extremely effective. It picks winning. It's not perfect. There's no investment process that's perfect and only picks winners. But if you go through it and you build portfolios based on it, you will find big winners before the market does. Just quick summary, the Zacks Rank. It aggregates all of the analysts' estimates on a stock. And, as Zacks, let's take a look. As a stock gets a high Zacks rank, a 1 or a 2, which really increases the odds of a winner when the analysts begin to raise their earnings estimates. So, analysts are ahead of the curve. And when they start to align on their expectations, the stock starts to move higher. But it takes time for the market to digest these upgrades. It takes time for these big money managers to execute their trades. And so the moment they start getting upgraded is when they get on the Zacks Rank. So I'm going to incorporate it into our analysis today. It's fundamental in how I look for stocks, and just because it's so effective. And when I use it along with the other methods that I use for picking stocks, you'll see it can be a really effective way. So I haven't practiced any of this yet. We're just going to go through my regular process, and I'm going to show you what it is I do to pick a stock. If I write an article, if I write a report, this is what I do it from start to end. Sometimes I'll come look at the Zacks Rank, but I generally like to start with the screener because the Zacks Rank is effective, but I like to incorporate other analysis methods which help me look for stocks. So I go here, I go to the screening tab, and you can see we've got multiple options. You can go right to the screening tab, and you can see there's some information on the page. And also, I just want to know this is all only to the premium users. So if you want to try these screeners, Zacks has all kind of great offers to get on and start using it. So we got lots of different ways to screen for stocks. These are some of the premium screens. Let's see, we got some growth ones. So you can see this screen looks for stocks that have Zacks Rank 1 strong buys, minimum of 20% growth in earnings, and 20% or more projected growth rate. Big growth, both past and present for big returns. It's a great way to look for stocks. These premium screens are very effective. You can look at these, or you can use your own. And I'm going to show you how I make custom screens for myself. And like, there's we got a little definition here every day. There's an educational aspect to on the screeners, and using Zacks, there's lots to learn and a lot of analysis to do on the Zacks website. So there's more premium screens here. This is just, the same thing, just on one page. But I'm going to show you this kind of stock screener. And this is where we begin to filter through. I think there's 5,000 or so listed stocks, maybe 10,000. I'm not sure. Let's see how many. Let's see, stocks greater than or equal to one. This just to see how many. Okay, it's 4,300 stocks. So there's a lot of stocks to look through, and it's hard to go one by one. So filtering for things that offer more bullish opportunities is a great way to begin your process. So first thing I'm going to do is I want a Zacks rank less than or equal to 2. Okay, so Zacks rank 1 or 2, less than or equal to, right? 2 or 1. And, those are stocks that are beginning to get upgrades from analysts. That's, just key to finding good stocks and using the edge that the Zacks tool gives us, that the Zacks rank gives us. All right. Another thing that I want to look at is, if you read any of my stuff, I like momentum. I like stocks that are seeing buying. They're starting to go up. They're going higher. And again, I'm going to pick stocks that aren't too expensive yet. We'll get there. So we want stocks, see price and price changes. This tells us, what information about how the stock is performing. So one way to do it is you can do price change year to date, price change over the last 12 weeks, 4 weeks, 1 week, relative price change year to date. So generally, I want to find stocks that are performing better than the market. So this greater than or equal to 0 means that the stock is performing as well or better than the market. If you want to perform as well as the market, you can just buy an index, right? But if you want to find stocks that go up a lot, big winners, big, runners, you want to find stocks that are, performing better than the market, right? The indexes offer great exposure to a broad portfolio of stocks, but, it's going to give you 10, maybe 12% a year returns. If you want to buy stocks that are going to go up, you want stocks that are growing faster than the market, with earnings or sales 12, 15, 20, 30, 40% annually. So we're going to get to that. So right now we're filtering for stocks that are performing better than the market. And I also want to see near-term momentum. So you can do 12 weeks or 4 weeks. And then I'm also going to show you when we get into the screen how you can filter by which ones are strongest. So let's do 3. This is 3 month momentum, basically price change over the last 12 weeks, right? So this goes back to mid-March, right? It didn't filter much. I'm actually going to do 1 month momentum, right? This is live, guys. So I don't know what's going to happen. I don't know where we're going. Okay, so we got down to 282 stocks so far. We got the Zacks rank, relative price change against the market, and we got a measure of price change over the last 4 weeks. You'll see why I do greater than or equal to 0. But basically, I want something that's positive within the last month, and you'll see I can filter it further, and it'll go in order from strongest to weakest. You'll see what I'm talking about. Now, I also want to see companies. We're going to do sales growth on this one. So we want companies that have sales growth greater than or equal to, let's say 20%. This is going to be some fast growing stocks. All right. Again, we got it down to 48. So looking for companies with strong sales growth, you can do it by earnings growth too. Sales growth estimates. You can do it by earnings growth as well. But I'm just going to focus on sales today. That's just what I'm looking for. And, sometimes if you do sales growth, you're going to get stocks that maybe aren't yet profitable, stocks that don't have positive earnings, which can bring very high returns, but it can also bring a little bit higher risk because these companies, they don't show profits. So they're not, it's a little bit risky. We don't know if it's going to be a profitable business model yet. Well, sometimes it does, sometimes it doesn't. But you can do further analysis to decide categorically, is this company going to be a winner? But this is just the early process, right? We're just filtering. So we could also do by valuations. We could do a filter by forward earnings multiple. We want anything that's trading at 100 times earnings, 50 times earnings, 20 times earnings. So let's see. We can see. I don't want to filter too much. Let's do 30. Anything trading below less than or equal to 30 times. It might filter it too far. And again, looking for sales growth, we could have these companies that don't have an earnings multiple, right? If they don't have earnings, the earnings multiple is going to be negative. So 26. All right. Well, let's see. Let's see what this gives us. This is a very stringent filter. I might come back and remove this forward earnings one, but let's see. Let's run the screen. There we go. Okay. So we have silver. Okay. Not a surprise. We have a lot of mining companies here. We have some financial companies, some bank companies. To be honest, I'm not really interested in either of those. They're both a little bit cyclical. Mining stocks are very hard to analyze. They're not my favorites. Personally, if I want exposure to gold, I don't buy miners. I just buy gold. So I'll show you what I was talking about with so we can filter by, see, this is a 4-week price change. We can see this stock was up, PaySign was up 40% in the last month, and it's up relative to the market 65%. So it's up 65% more than the S&P 500. And here we have sales growth. We can see sales are expected to grow 23% over the next year. And you can see that this company has a forward earnings multiple just 14 times. So PaySign, I'm just going to get into it. I don't know much about it, but let's just take a look. I mean, that alone is very compelling. 42% return to the last month. Sales are supposed to go 23%. And that's a very reasonable earnings multiple for a fast growing stock. So let's see, what is PaySign? I don't think I've ever heard of this stock. Let's see. This is just live, guys. I didn't do this before, so we may have just found a huge winner. All right, PaySign, we see it's got a Zacks Rank 2. It's a $275 million company. So it's a small cap company, not a lot of institutional coverage. I'll pull up a better technical chart than this, but we can see it's been flat basically since 2021, 2022, but it looks like it's breaking out of this long range. So let's see. We got this. This is interesting. We got earnings growth next year is almost 35%. Earnings multiple of 14.5 times, very reasonable and high growth. And you can see it doesn't have a lot of coverage. Sometimes, you just get one analyst covering these small cap stocks, and he raised his earnings estimates for current year. Went up 8% over the last 2 months from 29 to 35 cents. That's significant. And so what they do? Let's see. PaySign is a provider of prepaid card programs and processing services for corporate, consumer, and government applications through its PaySign brand. PaySign Inc. is probably known as 3P International. Okay. So it's a fintech company. You can Google it. Let's see. PaySign, custom end-to-end solutions, complicated payment problems. Cool. So, they manage payments for companies. And, this is just the process. You get into it. I'm not going to go all the way deep into it. You can go to the investor page, investor resources. Usually I like to look at quarterly earnings, quarterly reports. And this is just the process. For people who don't know where to start from the beginning, this is a 10K. I just want to look at the earnings. Okay, well, this is what you do. You go to the investor page. You can find the page. I'm not going to get too deep into it. We're not going to categorically analyze the stock. We're just looking from a quantitative metric. And then let's look at the stock. All right. So this thing has been on a real run since April when the market bottomed. So from about $2 to $5, okay, it's more than doubled. This is really strong momentum. Okay, guys. So this is a really interesting stock. I'm interested here. Right. Okay. It had, this is 2019. Wow. 2021. All right. It's done terribly. If I had to guess, I would bet that they had negative earnings. They were losing money. It wasn't clear what they were doing. And this is one of my favorite kind of turnarounds. Finally, they got positive earnings. Let's see this earnings report. 2 cents they reported. Okay. And the current earnings, they reported 5 cents. Okay. So it's getting better. Earnings estimate, it's 3 cents. Okay. But the earnings are improving. All right. Not an extremely profitable company, but as we saw, next year earnings expectations, it's just 14 times. So let's see. This is an important level when we get up to this $5. We got kind of a flag here. I think if you wanted to buy the stock, you just watch this level here. If it clears this level here, it probably goes up a lot. That's just, so we got a little, sort of a consolidation here. It's now holding above this upper level that was shown as resistance. Yeah, I think this is a really interesting stock. Again, I just want to show briefly, this is the process. This is when you start to dig into it. You do some more fundamental, some categorical research. Okay, so that's one stock, PaySign. Let's look at another. I saw one stock that I'm really interested in. This is a stock I've been talking about for weeks. It's another one of these really, again, I didn't screen for this purposely. This is just a regular screen I use. Probably how I found this stock in the first place. I don't even remember. But we can see Pagaya Technologies. This is another fintech AI company I'm super hot on. I really like what they're doing. So, it's outperformed the market by 94%. It's up 26% in the last 4 weeks. Sales growth 27% over the next year. And this is why I love it. 7.5 times earnings. It's like dirt cheap. And this thing is growing like crazy. Okay. This is something I really like to see. At Zacks Rank 1, it's a $1.4 billion company. Earnings are expected to go almost 28% next year. This is crazy. 7.5 times forward earnings. Huge earnings estimates upgrades. 40% this quarter, 36% next, 42% this year, 30% next year. Got 2 analysts covering it. They're both upgrading the stock. And this is one of those turnaround things, right? Look at this thing. It was up to $300. Let's see what description we'll get into the chart. Pagaya Technologies, technology company, building artificial intelligence infrastructure of financial ecosystem. Basically, they have their own proprietary AI analysis that they help other financial institutions like credit cards, credit lending institutions, helps them analyze people who are going to borrow money on more metrics than just, say, a credit score. So they give more minutia in terms of people's financial background, and they aggregate all of this data to give a better look on a lender's or borrower's creditworthiness. So PGY, I really like this stock. You can see I've been writing about it. I got an arrow here. I think I wrote about it yesterday. Check that article out. I did a little bit more research. This is when I first flagged it. It was this day or this day or this day. It was around $16 and first started talking about it. I think this morning right here. And yeah, so strong momentum, reasonable valuation, 7.5 times earnings, just like PaySign's 14.5 times earnings. Momentum, Zacks Rank. This is what I like to look for. It's a convergence of bullish factors, right? When you have a cheap earnings multiple, a cheap valuation, you limit your downside risk, right? I mean, what an earnings multiple means, right? In 7.5 years, profits to pay entirely for your current investment. So this thing looks like it's going to break out. Let's get this block review, right? So this breakout level is 1870, 1873. Let's see. It's important to see the close here today. So watch the close. But I think this thing is ready to go. We got a bull flag breakout, just like this bull flag breakout. And yeah, they got good growth. Oh yeah, you can look here to the detailed earnings estimates. So we can see sales growth, 20% this year, 16% next year. Huge earnings jump, almost 200% this year. Right? I mean, last year earnings were 83 cents. This year, $2.45. Huge jump. So company that goes from unprofitable, right, risky, we don't know what's going to happen, but it's, I mean, even back in 2023, right, it was at $31, but, right, let's see the earnings. Deeply negative, right, and it was a miss. They were losing 48 cents. Expectation was to lose 34 cents, so things were bad, right? This is sort of like deep value thing almost, right? Business model was not working. The stock was tanking. People expectations were low. Sentiment was in the garbage can, in the dumpster, and right, it's consolidating, and the company pulls it together. They and look, it's also breaking out from this level of resistance. They lean the team up, whatever. They find a way to make this thing profitable. And it's a financial technology company, should be profitable. So, okay, that's the second one. We got Pagaya, PaySign, a lot of pay stuff. All right, let's see. All right, we got a lot of mining companies, Silver, Fortuna Mining, know about this mining company, mining. Okay, Legacy. This is another one I wrote about yesterday. We can look at it, but you can check out my article and you'll see I wrote about Legacy and Pagaya. I think I used a very similar screen to find this yesterday. Let's see, Rambus. It's kind of, I think that's a semiconductor. See, gold, Tokyo Electron. Okay, this is another financial one. Let's look at Rambus. See what this one has. You don't know for sure, but it filters some stocks. You don't have to go through all 4,500 stocks. So we got 45 stocks to go through. We see Zacks Rank 1. That's a $6.4 billion company. Pretty reasonable earnings, right? We filtered for under 30 times forward earnings. 24.3 times earnings are expected to grow 17% this year. You got some upgrades. Let's see. Rambus, I believe, is semiconductors. Hardware, software, driving advancement, data center, mobile edge. Okay, so this is something else I like to look for, right? It's within a secular trend, right? Data centers. Data centers are key. It's the main piece of infrastructure for AI. Is another tailwind for a stock. Stock begins to get a premium multiple, premium valuation, momentum buying when this happens. So partnering with leading ASIC and SoC designers, foundries, IP developers. So their chip customized IP cores. All right. So they work in the semiconductor industry. They do something. I don't know. They design them or something. You gotta dig into these stocks. You go to the website. You look into it. But for now, we're just looking at the quantitative metrics, and this one's pretty good. This is pretty compelling. Okay, pretty good sales growth, high teens, right? Earnings growth. That's nice. This one's kind of interesting. It's not, the other ones have a PEG ratio below 1, where earnings are probably faster than the valuation multiple. But let's take a look at this chart. This is looking pretty good. Semis are a little bit cyclical, but they're picking up. I want to find something with a little bit better momentum, honestly. Let's just take a look at Legacy. I really like this. I really like this stuff. This is a really good one. This is a medical education company. You go there, you take a program, you learn about specific medical jobs. You can get licensed. I think a medical tech, not a doctor, not a nurse, but people in the hospital that do other supportive roles, help take the x-rays, help run the administrative, do the lots of stuff that is happening in the hospital or in a doctor's office. So education businesses are really good. Okay, small company, $120 million, small cap. This is also what's funny. You find small cap companies, they're not as much coverage. 15 times forward earnings. So next year earnings are 80.81%, which is extremely low. But let's get a detailed look at the earnings estimates. You see we got Zacks Rank 2. We'll look at the estimate updates. Okay, huge sales growth though. 38% this year, high teens next year. Okay, yeah. So next year's earnings, this year's earnings are going to be up 17%. This is pretty good. This is a pretty interesting company. And again, I like the low valuation, 15 times earnings. I believe the stock was looking really good if I remember my research from yesterday. Yeah, breaking out, and it looks like it's a couple cents from all-time highs. And it's a pretty recent one. I mean, not even a year old. This stock has been public. And yeah, I like this. I mean, when a young company breaks out to new highs, reasonable valuation, good growth, medical is good because it's pretty recession resistant. People are always going to want jobs in healthcare. So yeah, that's my process for finding stocks. This isn't an immediate investment in any of these. I've done some more research on them, but you go read the earnings, read about the company, read the news, you think about the industry. And yeah, that's how I use Zacks. Thank you very much for tuning in. I hope you found this valuable. It was very fun for me to do. It would be great if you comment in the video and like and subscribe. Any questions or comments you have, it'll be great to get some feedback. And if you really like the content, I highly recommend signing up for Zacks current promo. You can go to zacks.com/promo and you get lots more info from Zacks. So that's it. Thanks. Have a good day.